Good evening. Ira Epstein of Linn & Associates with your metal market wrap-up. And this wrap-up is for Wednesday evening, and that's August 11th, 2021, about 6:10 p.m. Central Time. So the gold had a nice rally today. But what was really going on, and I tried to show that this morning to my subscribers, is the odds were that the market was going to climb back into the lower Bollinger Band. In other words, get to the right-hand side of it. And that's exactly what happened. It's a bounce. Doesn't mean anything. It's not a trend change of any way. Same goes for the silver market, in my opinion. The dollar down a bit and foreign currencies up, but trend changes, no. So many of the currencies went down to the lower Bollinger Bands, and on the first challenge of them, what do the pros typically do? If they're short, they're covering, and the market gets a bounce. That's what I think is going on. I was laughing a good part of the day on the energies. I can't believe that here we were, a country producing 13 million barrels of oil a day. President Biden comes in, land leases are gone, the exploration in different areas, the pipeline is gone, and he's on the phone. I'm calling OPEC. They've got to increase their production. If you're going green, does it matter if it's happening in Saudi Arabia or America? This seems to be the tactic that all presidents have taken, except Trump, in all honesty. He was different. He went out for it, make America energy independent. So now that prices are up, the Biden administration realizes, and this affects the metals, that how much money can they get through on this budget realistically? The economy perking up, inflation high, $5 gasoline in some spots. That is why this took center stage, and don't forget that. The CPI numbers today came out moderate. Now, there are categories that were strong, and maybe the number's going to get a little more of a bump in the next report, because we've been reading that in big cities across the country, rents have been going up. Rents are one of these delayed items. If you rent in June, well, do they really go up until you start making your payments? They can be delayed. There's all kinds of things. It's a laggard. But it's so funny because auto repairs, dresses, they're hitting record highs for how high they went up. And I cover all that in tonight's written report. Let me get over here where I wanted to be. There we are. So here's your gold. I'm going to stick with what I teach. Resistance is back at 1812. The bias of the market is down since the market is under that. And you're down for the week, not even a percentage point, 0.6%. You had this monster drop from roughly the 1838 level all the way to 1680, and you're bouncing. Why not? So where's the resistance in the market off the bounce? Well, what you do have in the market so far is a lower high. I think you'd agree with that, and a lower low. This day is the hardest one. You got to clean the chart up with that because I don't know where to put this exact number. And that happens often on that type of pattern. The resistance is clearly the 18-day average at $1793.90. That's $37 away, let's call it. That's pretty far away. Getting up there might prove to be a trick. The market climbed back in the Bollinger Band. I'll take you out of this today. You had 3 days under. My rule of thumb, and it's simply a rule of thumb, but one that I teach and I promote, is you count in the futures market especially each consecutive day in a lead month. Don't go back months down the road a year from now and tell me, oh, it's under the Bollinger Band. They're not. You got to have volume in the market. So when you have a volume contract, and it's often in futures the lead month or months, you get 3 days in a row under. I count each day outside of a Bollinger Band on the top side or bottom side, taking away one of those percentage points. So coming in, there was a 98% chance the market was going to make a climb into the Bollinger Band. That's how I look at it. It's not going to stay out of that band much more than 5% of the time. You can see what it did, and it's still above it tonight. This is what it did today, and this is tonight. Okay, you can get under it again, but you've broken that pattern. That's the point that I'm saying. It's like you pull on a rubber band and you let go of it, and the market suddenly snaps back into it. That's the theory of this. In the gold-silver ratio, you're staying with the market over The red line, the 18-day average of closes, which means gold is stronger than silver. The higher the number goes, the more ounces of silver. In a perfect world, no commissions, nothing like that. You'd give, right now, 74.4 ounces of silver to get 1 ounce of gold. When you look at the silver chart, it did what gold did. If we come back here, you had your 3 days under. It's got a 98% chance of trying to get back into it, which it did, and it's doing that. There's nothing bullish on that. It's just that the market's alleviating it. You're still in a market condition that is close to oversold, not quite there, believe it or not. You got to get these numbers under 30. Do I think you're going to attract any selling against that Bollinger Band? I frankly don't. That doesn't mean there won't be, but first of all, I would not teach my clients to do so. In the copper market, we've been looking for the past 3 days that if we got a rally, at least I expected it to run into the first resistance at the 100-day average up to the 18, and it hasn't hit the 18. It's just sort of hanging here at that 100. That is still a resistance point. To break the downtrend, you have to get over this number, and that specific is right here at 442.15. So that would be where it's at. Do I think you're attracting new short sellers in the market? Well, they have to be pretty well heeled. If you're going to sell here and you're going to have a stop over that, just think about this right now. That's a 500-point risk at $2.50 each point. So you're going to have, what, about a $1,500 risk. Bye-bye. In the OC Platinum, maybe you get a bounce now back up to the 18-day average for the resistance. In this market, the likelihood is strong that's going to happen. So what's the difference between this market and that? I want you to look at this. That's called a locked-in, embedded, slow stochastic reading. And until the red line closes over 21, the market's in a downtrend. And I would expect that on rallies, the market's going to be sold in there. The market's hanging in, you get a rally, you're still embedded, and you lose it yesterday, which is today. But we're already into tomorrow's trade on Wednesday. I now think price is going to go up to the 18-day average of closes. That could be a combination of that average falling and price rising, but that's the difference. You had an embedded reading that you lost, and it is staying lost when we reopen tonight. So unless you get a big break tomorrow, notice both numbers are now above 20. The odds strongly favor you're going to get up there. I'm wrong in my thinking. If you make a new low under 954, it's a heck of a lot of risk to just pick up to 1037, $20 here, but that's what I think it's going to do, and it helps in your charting analysis. In palladium, you have what I call the psychiatry trade developing. What is that crazy term? It's when a market starts developing tight, slow stochastics. See the black lines? That's rather Bollinger Bands. When that occurs and the stochastics are not embedded, and they're not, you start bouncing back and forth here. And the reason it's a psychiatry trade is you're calling your doctor going, why didn't the market break out? Why is it moving out on me? How come there's no follow through to the upside? That so often happens. How do I know? Because before I learned all this, I had my doctor's number and I was calling all the time. When you get to the dollar index, you hit the lower Bollinger Band and you turned. Now you're overbought. I said yesterday, I don't know if it's going to have the steam to exactly get up to that number. There's some other numbers called window envelopes in its way. Now you have an outside day down. An outside day means you took out the previous day's high, low, and closed lower on the day. You did it in all the ways. If the market takes out today's high on either Thursday or Friday, look for the Bollinger Band to be hit. If it doesn't, it likely is going to correct, and the neutral number, should it decide to go there, is the 18-day average of closes. Nothing has broken the uptrend, but it is overbought. It's close to the resistance point, and you had an outside day down. In July Ethereum, as long as you have this embedded reading, I think traders are waiting for a break to get long. So I'm looking for them to buy it, still looking for higher prices. If you get the red line to close under 79, then I think the game is over at that moment. And then maybe you get back here. But there's another bullish event taking place. Notice how the 18-day average for the first time, let me just show this. The red has been under the green. And remember, this is a new contract, so I can't show you a 200-day average and all that, because in futures, and that's what I track, it's the futures market, that's not the case. It happened today. So that's called a bullish crossover. I'd love to have seen where the other averages are, and I can't even guess because I don't know what they were doing. But to make a long story short, everything's bullish unless the market loses the embedded reading, and even then, this should be the first support zone, wherever those two numbers are on the chart. So you put it together, you try to figure out where you're going to go. We had the CPI numbers. We got a couple of banks tomorrow. We got Mexico and the Philippines. They're going to set up what their rates are. It's expected that most of the banks are going to see, at least the Philippines should hold steady. But the Bank of Mexico may well raise its interest rate. It's fighting some serious inflation. It could be time for them to make a move. As for the G7 banks, well, we're all waiting on the UK. We think that they'll be the first bank to come out the door. We've got August 26th, Jackson Hole. So remember that as well. That's when the symposium begins. For those of you that trade in the grain markets, and I know I'm talking here the metal markets to you, tomorrow's an important day for you because you get the USDA grain report. We'll be writing on all that in the morning the way we did on CPI today and trying to tell clients what to see, because it was a moderate CPI. But if you're looking for pros that have been around this for a long time, not kids right out of college, and there's nothing wrong with that, but these guys know the fundamentals that write this. They understand options, futures, and we're not talking, oh, they're in this for 5 years or 10. We're talking long period of time. You might want to take a look at this, and we write them all day long. So there's something for everybody. You can go to the website to see them that we have, and/or you can go to our charting software. Now, that'll all be coming to our QT platform. So why don't you go to the website, sign up for the free offers. You might want to try the charting software. Everything's going to be in that for you. If you have a problem with that, call my staff. They'll work with you. I'm Ira Epstein. You have a good day. See y'all tomorrow.